Welcome back, Alpha Hunters. The markets are closed for the week of May the 12th of 2023. So let's get in, take a look at what happened this week, because it was a snooze fest and it was active, and it was a snooze fest and it was active, man. It was Jekyll and Hyde almost every day. You just didn't know what day you were going to get. So let's take a look at what went on. So we're going to start out price action of the week. Monday, not really a big gap really at all, kind of flat. We sold down a little bit. It was a pretty quiet day. That was kind of the story of Monday, Tuesday. Quick little snap down here in the afternoon, got bought up. Nice little lower wick on the daily kind of time frame. Tuesday, a little bit of a gap down, and we did almost nothing the whole day. Just very choppy, very small range. I mean, the low of the day was down around the 410.70 area. The high of the day was around 412. So pretty much most of the day, we traded within about 1 point on the SPY. Not a whole lot going on. And most of the market was really waiting on CPI, which came out Wednesday morning. The market was expecting 5%. It actually came in at 4.9%. And one of the things we were kind of talking about Tuesday on the live stream was, situational kind of awareness and analysis of like where it came in, kind of what the market impact would be. And I did mention like 4.9% in my eyes, in my opinion, is the most bullish case scenario for the market. And yeah, there you go. Nice little subtle gap up of what, about 1%. Let's see, about how far was that? We gapped up, not 1%, I'm sorry, 0.75%. So nice little gap up, flicked higher, and then we just traded lower midday. We were just kind of down at the lows of the day. And what was very interesting about Wednesday was all you needed to know for the week, because the high and low were all set in the first few trading hours on Wednesday. So the high and low of the week on Wednesday, and then nice little rally to end out the day. Now, a lot of this rally had to do with Google, Alphabet, having its I/O conference on Wednesday afternoon. So a lot of the market rally kind of got going on the backs of Google, really kind of taking off there. And Amazon was also playing the breakout card also there on Wednesday. And then Thursday morning, just before the market, PPI got announced. It was supposed to be expected at 0.3 and it actually came in at 0.2. So market, a little bit of a subtle gap down there. Sold off initially and then just kind of very mellow, kind of chopped around mostly for the rest of the day. Friday, nice little gap up here on the market, and then we just traded lower. There were some bounce attempts kind of throughout the day, but mostly just kept trading lower. Got close to breaking Wednesday's low, breaking that weekly low here midday, but did not quite, and then we rallied to end out the week. Taking a look here at the Federal Reserve balance sheet that got released Thursday after the market closed. Nice little uptick here. Not anything unexpected. I guess we've been having some regional banking issues really over the past couple of weeks, right? Over the past 2 weeks or so. So I guess not too unexpected that this came out and it was a little bit higher. It's really kind of tough to believe the Fed that, hey, they're going to continue to reduce the balance sheet while also trying to help make sure the banking sector doesn't just implode. All right, taking a look here at the VIX, and we didn't really get much movement on the VIX this week. Monday, nice little sell down, with Tuesday's gap up, we pushed a little bit higher. Wednesday was the volatile day, obviously. Wednesday was a volatile day. Thursday, nice little upper wick there, right? We had a lower wick on the market. Nice little upper wick today. We have a little bit of a lower wick on Friday. It is one that's very interesting because we were actually lower on the SPY and on the SP 500 week over week, and the VIX has gone lower. So be kind of mindful of what the VIX is doing, because the market is now starting to trend a little bit into that lower direction. So just be mindful. I know we haven't taken out some support levels around 404 from lower wicks over the previous 2 weeks, but we are starting to trend a little bit into that bearish direction. So just be mindful. And we'll talk a little bit more about that a little later. Taking a look here at the DXY of the dollar. Kind of mentioned last week, not really sure if the dollar is going to continue just to consolidate down here. Thursday when it broke, not really broke, but had a very nice solid move higher. Didn't really know if it was going to continue or if it was going to kind of consolidate and maybe break out here over the next week or two. Well, Friday comes and it broke. Like this is a pretty good change of direction. Past 2 days, nice move higher. Took out the high from May the 2nd. So any people that are trying to sell there on May the 2nd, they obviously just got taken out. So yeah, very nice change of trend. And if we just go to a weekly here, I could have just zoomed out on a daily, but we got a pretty nice looking possible double bottom here. And it's going to be interesting to see what happens. Are we going to just push and then roll over? Possibly, possibly. I mean, the other scenario is we can definitely just push, come, make this actual double bottom, and maybe we get back to going bullish on the dollar. It's going to be an interesting situation, however that kind of plays out. Take a look here at the 10-year yield. Still just, playing the support level game. I mean, it's having a really hard time to break through the 3.4 area and, to 3.3 area. So really in that area, it's been a pretty strong support level, and it wants to hold higher. Like it's not just breaking down. We do have some lower highs coming in over the past couple of weeks. Past couple of weeks actually had some higher lows, so we'll probably have a determination here pretty soon on the 10-year yield if it's going to break and go higher, break and go lower. Taking a look here at the 10 and 2-year yield curve inversion, we have still just consolidation. I thought we would have bounced maybe a little bit here already, but we are still consolidating. So we'll see if this next week or two we start to push higher, or if we're going to start to push lower, because this is about the time period where we should be pushing higher if this was going to be an inverted head and shoulders action. If we don't start doing it soon, I'd imagine we're probably just going to maybe continue to consolidate, or maybe we start to push back lower. The GLD and gold. Well, this week I'm not going to get into it too much, but Thursday we saw a major drop in commodities, and I'm talking about like economic commodities. If you want to check it out, go check out copper. You can go check out crude oil. A lot of things on Thursday on the commodity side dropped, and this might be an early indication of possible economic activity, because they weren't good moves on Thursday. They just were not good. These are bearish moves. But GLD, nice little drop here Thursday, Friday. I would have thought it would have dropped maybe a little bit more with how much the dollar moved up Thursday and Friday. It definitely seems like we're going to have a little bit of more of a comeback, and we do have some divergence is going on here with the GLD, as we definitely have a little bit of a resting divergence, right? We had a higher price last week, and now we are seeing lower moves on the indicators on the MACD and stochastic. So we'll see what happens here on the GLD, but at least for now, probably going to be setting up pretty good into that bearish direction. At least maybe a good period of resting here. HYG, very nice little move here on Friday. It's kind of a choppy week here for the bonds and the HYG, the high yield corporate bonds especially. So not too volatile, it's just choppy. So we'll see what happens early this next week. Doesn't really look like it wants to go higher. Starting to get some of these lower kind of moves coming in here. So we'll see what happens, but starting to definitely pick a side and trying to go in that direction. A lot of it has to come back to this gap down that we had last Monday on May the 1st. Man, that was such a strong gap down. We've only traded above that day one time, and that was May the 3rd. So other than that, it's been mostly lower than that high on that day, and starting to look like it wants to break down. The LQD, the investment grade side of the bonds, this sucker had that gap down also on May the 1st, and we've traded above it a few times. Now this could be a little bit more of the whole flight to safety. People are unsure of the market. They want to go to the like safer spot in the market for bonds. That could be part of it, but we also did see a nice bearish move today on the LQD. So not really looking super strong here. And yeah, you could definitely say that this might look to continue, maybe even a breakdown. All right, taking a look here at the week over week change for options. As we approach May 19th, the big expiration that we got coming up, the big one, the second biggest one actually we got out there right now. June 16th actually overtook it with how many puts were actually bought out there this week. I mean, just crazy amount of puts bought out there for June 16th. But yeah, we do have a pretty big expiration out there for this next Friday. And then not too many calls being bought going into the future, okay? As far relative to puts, there was definitely more puts across the expirations being bought, and you can see just how many we're buying out here in June 16th. And the other thing to kind of be aware of is we do have a major catalyst coming up, whether it's good or bad, but the U.S. debt ceiling. And if that is going to be solved by the time US possibly defaults on its debt, which is going to be June 1st, if they don't push it back or anything. That's why you probably did see a lot more puts being bought out here, especially in June. But starting to see more July 21st activity out there as well, and August 18th. So yeah, starting to see some of the monthlies past June start to pick up some activity. Be interesting to see if that activity continues past this like next 2 to 3 weeks as we get into June. Maybe get past the debt ceiling and see if puts continue to get bought. All right, taking a look here at the Fed Watch tool. So this thing was moving pretty good. Wednesday, when we got CPI, by the end of day on Wednesday, the rate probability for another rate hike, another quarter point rate hike, was actually down to 0%. You can see what it closed at Thursday. It closed at around 11%. And then Friday it closed at about 17%. So it was really interesting to see just how much it dropped and then came back up throughout the week. But week over week, those odds actually did climb about 10%. So, but we are starting to see some movement actually out here in the farther end to where it's like higher rates for longer kind of pricing in. And this might be another reason why it's kind of like holding back the market for now, as the market is starting to raise the probabilities for higher rates as you go out in some of these outer months throughout the year. It's just kind of interesting to see how this changes really day to day. And, we do look at this on the live stream. Thursday, end of day, we had 0% chance to be back down to this like 400 to 425 area. But Friday, end of day, we're, basically at like a 12% chance. But this is coming off of like, higher rates for longer for all the previous months. So it's getting really weird out there on some of this rates stuff that's coming through. So we'll just have to see kind of how it plays out and watch some of the data. But yeah, it's getting like higher rates for longer, the market starting to get into that kind of direction, but getting a little weird out there on some of these probabilities. All right, taking a look here at Google Alphabet. And this week they had a very strong move. They had their IO event on Wednesday. They had a follow through carry up day on Thursday. Friday was pretty flat for them. But what I wanted to kind of point out here is Alphabet has a huge bearish divergence. Now, you don't typically see these too much, but they do have higher highs on indicators, but they have not taken out the price from back in August. So pretty good little divergence here. And this is something we were kind of looking at the live stream. I figured I'd kind of show it off this week. And we're just going to look at a few others. All right, so this is AAPL. And what you see here on the weekly, well, we have lower highs compared to that August high that we put in, but we have higher highs on the MACD and stochastics. So again, here we also have another weekly divergence. So it's some of these have been on a pretty strong run so far this year. Not exactly some of the best technical setups, especially like the medium term kind of time frame charts that you kind of want to see. Whether they are massively bearish and they come down and break, their past 52-week low, maybe we just see them, have some bearish movements here over the next couple of months. Take a look here at Meta, META. This is another one that's been on quite a run, really ever since, last October. It's just been on an absolute tear. This one has a pretty good divergence as well. So some of these are starting to really show off some pretty strong bearish divergences. But yeah, this is another one showing off a pretty good one as well. And since I know you're probably wondering, oh, we just looked at several tech stocks, I wonder if the Qs actually have that kind of a bearish divergence. Well, yes, they do. The Qs here on a weekly from that August high, lower prices currently so far, and we do have bearish divergences. We have higher highs on the indicators, but we definitely have lower highs on the price so far. And if you're wondering, well, if the Qs have it as well, what about the SPY? And yes, the SPY actually does have it as well. The SPY from that August high, you see where these mounds are for the MACD and stochastics and where our recent price action is. Definitely a lower high, but we have much higher levels on the MACD and stochastics. So definitely have bearish divergence there as well. All right, taking a look here at the DIA, the Dow Jones, probably a little bit more on the bearish side this week. Wednesday had a pretty bearish move. Thursday had a very bearish move. Huge gap down, traded below Wednesday's low. This is kind of a tough one because, here over the past few weeks, they definitely have traded below some of the lows and kind of like have a trending low here. Be interesting to see what happens here on the DIA, and really hasn't done a whole lot really since about mid-November. It's been in about that same kind of price area. Had a very strong move coming off the lows in October into early mid-November, but really since then hasn't really been doing a whole lot. All right, taking a look here at the IWM. And so over the past couple of weeks, I've kind of mentioned this idea that, we could definitely see where smaller stocks or small cap stocks, even stocks in the SP 500, but just on the lower end, not the top 10%, but like the lower 90%, which it's hard to say like lower 90%, but all the other stocks that aren't like the big ones really start to bring down the market, because we're kind of still seeing that like the IWM, small caps, even mid caps are kind of just starting to drop off here a little bit too much. And it could just be a situation where, yeah, they lead us lower. And then later on, as people look to scoop up great deals in the small caps, they liquidate out of the big caps, all the big stocks. And then that's where we get the really strong selling from, where the indices actually sell down a lot because people are liquidating out of the big tech stuff and going and diversifying and buying up really good deals on the small cap stuff. So just an idea, but I would definitely be keeping an eye on the IWM, because this thing's been not performing really good at all, really ever since that regional banking issue that we had back in beginning part of March. So yeah, take a look here at the Qs. So I just kind of showed you off that divergence action. Last week I was really kind of looking for this move up into about the 326, 327 area. Well, it definitely got there. It got to a high on Friday of 327.17. So I definitely was looking for that. I thought it would happen earlier in the week, not on Friday. And it's going to be really interesting to see kind of what happens here. Obviously, we have a lot of divergences across a lot of heavily weighted stocks on the indices, on the major indices. So, and also a lot of those stocks are hugely extended from the runs that they've had here over the past couple of months. And it seems very crowded that only just a handful of stocks are just performing that well in the market. So I don't know if the Qs are going to get slaughtered. People are going to try and buy the dip, as a lot of those stocks have comeback moments, but I would imagine the Qs probably do start to slip here. And taking a look at the equal weighted SP 500, the RSP, very much looks like the IWM, definitely on the lower end here, breaking below Wednesday's low, something the SPY did not do. So definitely did it on Thursday and Friday. Just didn't hold down there. So it would be curious to see kind of what happens here on the RSP going into the next week. It's just one of those, if it keeps breaking down, then people are going to start to give up. And we weren't really seeing strong conviction on buying today. All right, taking a look here at the SPY, and we are still just trading in this range. We're going to probably come into the 408 area. I kind of thought we might have done it today. If we broke Wednesday's low, we definitely would have, but we got close to doing that. If we get down there Monday or Tuesday, I would imagine we have some kind of bounce there around the 408, and then maybe slice right through it. And if we get through 408, we're going to come fill this gap from, what was this, last Thursday, May the 4th? Yeah, so May the 4th, we got that, kind of abandoned baby down there. And it's going to be interesting to see what happens there. I would imagine we at least bounce, but it'd be curious to see if like, hey, that was the gap fill and now we're bouncing and running, or if that was just kind of like a dead cat bounce where we just kind of filled the gap, people tried to buy it, and then it just rolls over. Major, I'm going to tell you, the major support level is right here, these lows from April 26th and May the 4th. Those lows are massively important. If we get to close below those, we have a major trend change. I mean, major trend change. So between that and, some of the lows that we put in this week, we're still just trading sideways. So not too much going on. If you're wanting to try to be bearish, you don't like some of the price action, make sure you go out plenty of time on your options, plenty of time. November, start to go out to like November options at the earliest, 6 months out at least. So if we do get a breakdown, you're probably going to get a bounce, a retest, and then a rollover again. So you could even like get a breakdown, take profits, look for the retest, and get back in, that kind of thing. But take your time. Don't try to rush, and look for the very quick breakdown. Stay away from 0-day options. We're here to make money, not lose it. All right, Alpha Hunters. Y'all have a great weekend. Take care.